Good morning. Welcome to Forex in Four. Today is Wednesday, August 31st, 2011. We're starting out this morning. We're taking a look at the British pound because it's been under a little bit of pressure lately, and we're looking at a 30-minute chart here, and you can see that it's been selling off here. Got up to around the dollar 164 level. All right, we pulled back till we just hit about this double bottom here at about 162.50. And as you can see here, I'm just going to draw a little line for us. You can see that there's been some previous support there in some of these levels, so that's an interesting place to say the least. So that could provide a little bit of short-term support there for the pound. But basically what happened is the consumer confidence survey came in. They were expecting a decline of 33 on the reading. All right, actually came in a little bit better than expected with a decline of 31. Okay, so that's really no solace there, but consumer confidence is declining in the UK because of the economy there. So right now it looks like we could be sitting here and trading some of these ranges that we've seen of late. Okay, as things start to narrow. It looks like we're in for about 161 up to that 166 area, and these are going to be tradable ranges, I think, for some time as the market tries to figure out exactly what's going on. Just want to flip over to Eurozone real quick. Okay, the euro's actually, let's see what it's doing here. I think it's a bit lower there, and you can see, wow, this looks almost like we're sitting just below the daily pivot here. So the question is whether or not we're going to bounce and move higher, back up to this 145 level, all right, or if we're going to do a little bit of a pullback here to 144. But the ranges are also narrowing on Europe as well. Now we can take a look at some of the numbers that came in. We had German retail sales figures. The year-over-year number came in showing a decline of 1.6% versus decline of 0.8%, and then also had German unemployment rate, which came in steady at 7%. Okay, but the change was a little bit less than expected. So they were expecting actually no, it was better than expected. Excuse me. They were expecting a decline of 10,000, and the unemployment, well, I guess that's worse than expected. Whatever the case may be, it was 8,000 versus 10,000 with unemployment. So that's really what was going on in the Eurozone. All right, we also had some CPI data in Italy. Came in a little bit hotter than expected. All right, but no one's really concerned about that right now. What they're really more concerned about is what Germany's going to do as far as being able to ratify this EFSF vote that's going to be coming later this month. It looks like Chancellor Merkel is building some support among her own coalition. All right, but the politics of this is getting pretty heavy. So this is still an uncertain time with regard to euro. But one of the things that we look at when we look at the euro is we also have to take a look at the dollar, because the dollar and the euro, they've sort of been trading. They're sort of smack dab with each other. I mean, they're diverting a little bit, and dollar goes up a little, pound or euro goes down a little, euro goes up a little, dollar goes down a little versus one another. And you can see here that we're starting to hit this range here, okay, pretty tightly. And this is a 2-hour chart here, so you can see for the past month we've sort of been in a fairly tight range, and this is some pretty choppy action in here. But let's talk about the dollar real quick. So yesterday, consumer confidence figures came out in the U.S. Worse than expected. 44.5 reading. They were expecting 52. Okay. We also talked about the Fed speak that we had. The guy Evans out there, and I don't know if he was just I don't know what the deal was with that meeting, but basically he spiked gold higher. All right, with fears that perhaps there's could stoke additional inflation if the Fed goes ahead and tries to ease further. And that was confirmed a little bit later in the day by the release of the FOMC meeting minutes. And essentially what they said is that they're open to doing more stimulus. They're just discuss different options. So the market's seeing this and saying, okay, these guys, it's not a question of if, it's a question of how they're going to do it. So the market is expecting more stimulus, perhaps at the end of this month's meeting, or it could be the case where maybe this end of this month they're going to lay out what they could potentially do. But they do have some policy tools left in the quiver, if you will. But it's just a question of how they're going to go ahead and do it. But the market right now is thinking, okay, this is what's going to happen. So that's what's happening with the euro. Just want to show you the Kiwi here a little bit. Let's see, Kiwi's actually, let's go to shorter term. All right, Kiwi's a little bit higher, a little bit lower. It's sort of meandering around here. It looks like maybe we're putting in a little bit of double top resistance here ahead of this, say, 85, 70 area. Okay, they had Some confidence figures came out as well. All right, business confidence, and it's the lowest it's been in about 9 months. So we're seeing that from the Kiwi. But right now, Kiwi's being driven by dollars, so that's interesting. Also, want to take a look at let's take a look at the Swiss franc. Okay, Swiss franc strengthening versus euro. Swiss franc is also strengthening versus USD. Now, what happened this morning was nothing, actually. This is the first Wednesday this month that the SMB didn't come out with some sort of statement regarding how they were going to attempt to intervene in their currency to prevent it from strengthening. So they didn't say anything today, and all of a sudden, boom, everybody starts buying franc again. So it's going to be interesting to see what, if anything, they do in response to this. Let's see, taking a look at dollar yen. All right, we've got a little bit of yen strength here, and again, we've been sort of in this tradable range here. We know that we got down into the 75 handle, okay, a little bit earlier. All right, just briefly touched it, but I think we're still sitting in this pretty tight range here. Now, industrial production figures in Japan came in lower than expected. They're expecting a decline of 1.9%. They got a decline of 2.8%. They were expecting the month-over-month gain to be 1.4%, and it only came in at 0.6%. So Japanese industrial production still not back online yet, but you know, again, they're still recovering from you know, the earthquake and the tsunami and the natural disasters that they've been seeing. All right, one of the other things I want to take a look at is, let's take a look at the Canadian dollar. Okay, we're going to get Canadian GDP estimates annualized later this morning. Okay, and they're expecting, well, geez, they're expecting no gain for the quarter. That's a little bit odd. I'm not sure exactly how that number's going to set up here, but you can see we've also been sort of trading this range. Dollar weakening a little bit versus the CAD. And it looks like maybe we want to retest this 97.5 cents if this number comes in a little bit better than expected. All right, so what do we have going on here in the U.S.? Well, this is the first week of September starting, so that means we've got the labor reports coming out. Okay, and a little bit later this morning, we are going to get the ADP, or no, was it? Yeah, the ADP employment change figures, which last time around it was an interesting number because it sort of set the stage for a better than expected non-farm payrolls report, which was on Friday. So today is ADP employment change. They're expecting a gain of 103,000 jobs. All right, and then tomorrow we get the initial jobless claims, which is bound to be another 400,000 loss. I think 408 is the expected number. All right, and then Friday we're going to get the unemployment rate, which is expected to stay steady at 9.1%, and we're expected to have gained 75,000 jobs. So that's down from the July report that we got last time. Okay. But it's also a sign and a barometer of what the economy is doing. So right now we've got the focus on employment. All right, Obama's going to be speaking about you know, what we can do to have jobs ready, and he made some sort of statement. I don't even know where it came from, that, you know, we could add 1 million jobs in certain areas. That's great, but again, we haven't heard anything specific about what's going to happen with it. It sounds to me like this is you know, he's setting up here for some more government spending, put people back to work on public works projects, which, you know, listen, hey, a lot of it needs to be done, especially after this hurricane we've seen in the U.S. here, but, you know, we've got to find ways to cut spending in other areas, and that's, you know, one of the problems that we're having is that, you know, a lot of things need to be done, but nobody wants to give up, you know, the other spending. And I mean, if you think about it in your own personal life and what you do, you know, if you have a, you know, if you own a home and all of a sudden you've got a problem with your roof that needs to be fixed, all right, well, if you have to take money from one area to fix the roof, all right, which is a necessity, all right, maybe that means you can't go out for pizza as often as you'd like that month, you know, and you have to cook at home a couple times. And, you know, that's the way that households balance their budgets, and it's how they make decisions, you know, and the federal government just seems to be immune to that. So, you know, we're going to have to see. Obviously, this debate's going to pick up. These guys in Washington are due back next week. I'm guessing nobody wants to come back a couple days early to try and help deal with the disaster relief happening here from this hurricane, but so be it. You know what, I think less is more in this situation, to be quite frank. So you know, no politicians are good politicians in my book at this juncture. So anyway, that's what we're looking at today. We're going to see if this ADP employment change has any effect in the markets. We've got stock markets set to open higher. Oil's pulled back a little bit, and you know, we can see that gold is a bit higher too. So let's see here. That's really what we're looking at today. So yeah, let's just keep an eye out for that ADP employment change, see if that moves the needle at all. So good trading to all.